Okay, what is going on, guys? Welcome to Stock Talk with Nico Criticos. We have lots of action today going on in the stock market, so I had to make a second video today. And this video is going to be a stock analysis for Snowflake because the stock just went up over 35% after hours. And so we're going to go over their earnings report and talk about, is this a quality company? Is it a good time to invest, etc. So Snowflake is a company I've never owned, but this is a cloud data warehousing software company. Okay, the firm offers data cloud, an ecosystem where Snowflake customers, partners, data providers, and data consumers can break down data and derive value from more data. Okay, so it's all about the data at this company. This is now a $60 billion company. Here's what the 5-year chart looks like. I would ignore this era of 2021 for the stock because this was an outlier and everything was overvalued. There's a reason 2022 was such a harsh crash. So it's been in this range though of around whatever you could call it. I don't know, 100 to 200 and around let's say 150 to $160 or so was kind of the average over the last couple of years, and now we are moving up again. So we will see if this holds. But if we look into their earnings, we can see the first thing is that Amazon said its cloud division has landed a $6 billion spending commitment from Snowflakes, which includes the use of the company's custom silicon and chips for AI. I checked Amazon stock. Amazon stock's up a little bit. It's up about 3% today, so nothing crazy. Snowflake's purchase of service and tech from AWS will occur over 5 years, and they intend to expand its use of Amazon's Graviton general purpose chip, as well as cloud-based graphics processing units for AI. It's the latest sign that AWS is gaining momentum in AI as clients turn to the market-leading cloud for more advanced technologies. Claude and creator Anthropic said it aims to spend over $100 billion on AWS over the decade. And I know this sounds like this article is about Amazon, but it will get into Snowflake. But with that being said, it says Amazon also has a deal with OpenAI. There's plenty of people out there saying that the hyperscalers investing whatever hundreds of billions of dollars into data centers is not going to pay off. And I mean, when you look at numbers like that, think about that. Anthropic is saying they're going to spend over 100 billion over the next decade. So that's one company. What is it going to look like after OpenAI and all these other players also, partner with Amazon or Meta or Google, whoever it is? I think they are going to make hundreds of billions of dollars over the next couple of years. So I think that investment, that's another reason why I'm bullish on these companies like Microsoft and Meta, Amazon, Google, the companies that are investing all that money into data centers. I think it's a smart investment. Both of its agreements with the AI model companies include an equity investment, while the Snowflake deal does not. Snowflake, which went public in 2020 as a market cap of 60 billion, has long relied on AWS. The shares jumped after they reported 39 cents in adjusted EPS. I like GAAP EPS on a 1.3 billion of revenue, up 33%, which it's good, but it's nothing insane. Especially look at Snowflake's upcoming revenue, 26% and 24%. Okay, which again, it's decent, but it's nothing crazy. Analysts are expecting right under those numbers, so they beat numbers. And guidance was strong, calling for a 12% adjusted operating margin, beating the expected 11.9%. Okay. They were also acquiring an AI startup, Natoma. I wonder what Natoma does. What does Natoma do? Natoma is sits between your AI and your enterprise systems, connecting any AI client or agent to every application, database, and tool. Okay, so basically, it's just going to add AI into their platform. It disclosed an amended deal with an unnamed cloud provider for 1.2 billion in spending over 5 years, with 350 million coming in the final year. The provider was Amazon. Blah 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 blah. The new $6 billion arrangement implies an average annual spend of 1.2 billion. Wow. AWS announced its first ARM-based Graviton chip in 2018. I think it's crazy it's been that long. It feels like it's a much newer thing. It remains the company's most successful chip to date, and they first talked about it in 2022. They also have close ties to NVIDIA and blah 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 blah. And now we're seeing renewed flurry of demand as mass AI adoption shifts for chips like Graviton. And Meta said it would also draw on hundreds of thousands of these Amazon chips. Another great thing. Okay, let's get into this now. So they are experiencing Lots of volatility right now after the CEO, I guess, left, the unexpected exit, which was last year, slowing growth, a massive security breach scare, and massive multiple compression. Which we could take a look at that right now too. Let's go over here. What does the PE done these last couple of, oh wait, we can't look at PE because they don't have one. They do have cash flow though. And if we look at that, we could see that the free cash flow yield is right under 2%, which is it's okay. I guess it's on the higher side of things, even though it pretty much has hung out super low or super high. So, okay, that's not bad. Price to sales. Oh, price to sales is definitely down over the past compared to the last couple of years here. Which a 12 is still not cheap, but I guess compared to 20, it's cheap. Um, but really, I mean, it's pretty close to the cheapest it's been trading though. So that's an interesting thing. Okay, the stock jumped, and Snowflake possesses a strong data network effect. All I hear about is these switching costs. Unlike traditional SaaS companies that charge per seat, they use a consumption-based model. I think this is starting to be a more common thing with the AI thing. Once an enterprise centralizes its data warehouse, data lakes, and analytics onto Snowflake, moving petabytes of data, I never heard of that one, out to a competitor like Databricks or Google, incurs massive fees and operational risks. The data marketplace allows companies to seamlessly share live data sets with vendors, partners, blah, blah, blah. The threat Databricks is aggressively attack Snowflake. I have not done analysis on Databricks yet. Attach Snowflake from the machine learning and data engineering side, while cloud giants like Amazon, Google, Microsoft offer cheaper, bundled alternatives. Their net revenue retention still a healthy 126%. That is very healthy. That's higher than a lot of companies. Has compressed from its historical highs of 150. Okay. Okay. Um, so total revenue came in. We already went through these numbers, up about 30%, raising guidance, representing 31% growth for next year. Announced that the Snowflake Cortex, their enterprise AI offering, has scaled to 2,500 active accounts in the last 3 months. They're actively running AI workloads on it. Wow. They announced a massive multi-year $6 billion collaboration with AWS, cementing its position as a preferred AI data architecture on the cloud. Okay. And we see the stock moving. However, its non-GAAP metrics and free cash flow generation are highly robust. And given that AI is driving expanded workloads and data consumption is scaling exponentially, they are proving it can maintain a 25% CAGR over the next 5 years. By 2031, revenue should scale from about 6 billion to roughly 16 billion in the next 5 years. Interesting. That is very interesting. What are we looking at for looking at 6 and then 7 billion? Okay, and they're saying 16 billion. Okay, maybe. It's heavy upfront AI R&D and product deployment costs will ease, and then management is guiding for adjusted free cash flow margin of 23%. They should expand rapidly at 30% CAGR for EPS, predicted 5-year non-GAAP EPS of $6. Okay, that's a different story. Still, the stock is so expensive. It trades at a premium forward price to sales of 13 to 14. Expected non-GAAP PE multiple of 50 by 2031. We're looking at $300 a share. That's crazy. That's basically what it's at now. So let's go back down here. Price to sales. So I see this compressing. I don't see this being a good valuation. They're not making any money and it's already worth 60 billion. That's crazy. My company makes more money than them and we're not worth that much. So I guess they are doing a billion in free cash flow, but still they're not profitable. So I would value this at like I would value this at like 20 or 25 billion. So I'm sorry. I know some people are going to be bullish on this, but valuation matters, okay? Valuation matters. I say the stock should be worth no more than $100. That's where I see it. Sorry. So that's what we have here for Snowflake. Money losing company. They lose over a billion a year. I don't know why you would. So you're going to buy it for 60 billion and then you're going to keep losing $1 billion a year for they've been doing this for years. Who knows how many more years is going to go on? And then what, 5 years from now, 5 years, 7 years from now, they start making what, $100 million a year, $200 million a year in profit. And what kind of investment is that? What is it going to take you 85 years to get your investment back if you put 60 billion in it and then you lose another 5 billion over the next couple of years? How long is it going to take to make sixty billion back from this stock? It's going to take over 50 years. Um, yeah, that's it. It's not even worth really looking into these other metrics much, just because it's not like, I mean, they've had some nice revenue growth, but I mean, like, okay, what was their, see, the revenue growth back in the day, 47%. It used to be a little bit better, but I mean, when you're talking about 25% revenue growth and they're losing $1 billion a year, like put a price to sales of like a 5 or a 3 or something on it. It doesn't need to be trading at this high. So that's it. This is, it's the same thing as when I valued the stock 5 years ago. It's always been the same story with this. That is my analysis for Snowflake. Now, if you are a shareholder of this prior to today and you experienced that 36% jump, I'm very happy for you. Congratulations. And I would, if it was me, if for some reason I ended up, if for some reason I bought this stock, I would sell it because again, the valuation just doesn't make sense right now. So let me know what you guys think though down below in the comments. Otherwise, I will see you in the next video.